Based on the historical data and forecast, Bitcoin shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast for the next week indicates continued upward momentum. The RSI has been fluctuating, but recently crossed above 70, suggesting overbought conditions. However, given the strong trend, we can consider a strategy that utilizes pullbacks to enter long positions. Specifically, I recommend a strategy that looks for opportunities when the RSI dips towards 50 and the price touches the lower Bollinger Band. For example, if the price retraces to 111400 and the RSI is around 50, we can enter a long position. The stop loss should be placed just below the lower Bollinger Band, around 110000, and the target price should be set at 118,500, aligning with the forecast high for July 17, 2025. To refine this strategy, let's incorporate a layered approach. When the price reaches 118500, we can consider taking partial profits while maintaining a portion of the position with a revised target price of 122,300, the forecast high for July 17, 2025. This allows us to capitalize on the overall upward trend while mitigating risk. This layered approach combines the RSI and Bollinger Band signals to provide a robust strategy for high returns. The initial entry price is $111,400, the stop loss is $110,000, and the first target price is $118,500. Based on the historical data and forecast, Ethereum shows a clear uptrend with increasing momentum. The price has consistently broken through resistance levels, and the forecast indicates continued upward movement. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Initially, we will wait for the price to reach the $2,740 level on July 11, 2025, Friday, coinciding with a potential oversold condition based on the RSI. If the RSI is below 40, we will enter a long position at $2,740, placing a stop-loss order at $2,700 to mitigate potential downside risk. Our initial target price will be $2,830, aligning with the forecast for July 12, 2025. Subsequently, we will adjust our strategy based on the evolving market conditions. If the price reaches the $2,830 target, we will consider trailing our stop-loss upwards to secure profits. Furthermore, if the RSI approaches the overbought level of 80, we will consider taking partial profits and tightening our stop-loss. As the price continues to rise towards the $3,030 forecast level on July 16, 2025, we will reevaluate our position and potentially set a more ambitious target price of $3,080, contingent on the strength of the uptrend and the RSI readings. The support price of $2,770 will serve as a crucial reference point for managing risk and confirming the validity of the uptrend. Based on the historical data and forecast, XRP shows a clear upward trend. The price has been consistently moving towards the resistance level of $2.74, with the forecast indicating further gains. The RSI values have been climbing, reaching $72, suggesting the asset is approaching overbought conditions. However, considering the overall bullish momentum and the forecast, a strategic entry point can be identified. I recommend entering a long position at $2.41, coinciding with the start of the forecast period. A stop-loss order should be placed at $2.35, just below the recent support level and below the bottom of the Bollinger Bands, to limit potential losses. The initial target price should be $2.61, aligning with the first forecast price and a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential pullback. Therefore, after reaching the initial target of $2.61, we can consider a partial profit taking and adjust the stop-loss to break even at $2.41. If the price continues its upward trajectory, we can set a second target at $2.71, the highest forecast price. This layered approach allows us to capitalize on the upward trend while mitigating risk and maximizing potential returns. This portfolio strategy combines the RSI and Bollinger Band signals for a balanced and high-return investment approach. Based on the historical data and forecast, BNB shows a clear upward trend. The price has consistently been moving towards the resistance level of $709. The RSI values, though fluctuating, generally indicate a neutral to slightly overbought condition, with the last few days showing a rise towards 66.0. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for further price movement. Considering these factors, I propose a long position strategy focusing on the forecast period. We will enter a long position at $674, placing a stop-loss order at $668, just below the recent lower Bollinger Band. The initial target price will be $685, aiming to capture a significant portion of the projected upward movement. To refine this strategy, we will incorporate RSI signals. If the price retraces and the RSI dips below 30, indicating an oversold condition, we will enter a long position at the retracement level with the same stop-loss at $668. The target price for this oversold entry will be $694. Conversely, if the price approaches the upper Bollinger Band and the RSI reaches 80, indicating an overbought condition, we will consider exiting the position or tightening the stop-loss. This combined strategy, leveraging Bollinger Bands for trend confirmation and RSI for precise entry points, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Solana demonstrates a clear upward trend. The price has consistently tested the support level of $147 and bounced back, while also approaching the resistance level of $166. The RSI values have generally been above 40, indicating a bullish sentiment, and have recently crossed above 50, further confirming the upward momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $155, placing a stop-loss order at $147 to protect against potential downside risks. The initial target price will be $166, aligning with the resistance level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, we will consider entering a long position at the prevailing price, with a stop-loss at $147 and a target price of $166. Conversely, if the price touches the lower band of the Bollinger Bands, we will enter a long position at $147, setting a stop-loss at $144 and a target price of $166. Finally, if the price reaches the upper band of the Bollinger Bands, we will take profits at $166. This combined strategy offers a dynamic approach to capitalize on Solana's upward trend while mitigating potential losses. Based on the historical data and forecast, Dogecoin shows an upward trend with increasing momentum. The RSI consistently rises, indicating strengthening buying pressure, with recent values exceeding 50 and approaching the overbought level of 80. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. The forecast prices also support this bullish outlook, predicting a steady increase over the next week. Therefore, I recommend a long position strategy targeting the resistance level of $0.215. We will enter a long position at $0.175, placing a stop-loss order at $0.166, just below the support level to limit potential losses. Our target price will be $0.215, aiming to capitalize on the anticipated upward trend. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider an additional entry at $0.178. Conversely, if the price touches the lower Bollinger Band, it could be another entry point. Upon reaching the target price of $0.215, we'll take partial profits and move the stop-loss to break even to secure gains and protect against potential reversals. This portfolio combines the trend-following approach with RSI and Bollinger Band signals to maximize returns while managing risk effectively. Based on the historical data and forecast, TRON shows an upward trend, consistently closing higher and with a forecast projecting continued growth. The RSI values are generally above 50, indicating bullish momentum, with recent readings pushing towards the overbought territory of 80. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. Our entry price will be $0.293, coinciding with the latest forecast price and the recent upward momentum. A stop loss will be placed at $0.287, just below the support level, to limit potential losses. The initial target price will be $0.302, aligning with the forecast price for July 17, 2025. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll enter a long position at $0.264 with a stop loss at $0.262 and a target price of $0.28. Conversely, if the price touches the upper Bollinger Band, we'll consider a short-term long position at $0.295 with a stop loss at $0.293 and a target price of $0.3. Combining these approaches, the most efficient portfolio will be a weighted average of the strategies, prioritizing the upward trend with a base long position at $0.293 and adjusting based on RSI and Bollinger Band signals for tactical entry and exit points. Based on the historical data and forecast, Cardano shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast for the next week indicates continued upward momentum. The RSI has been fluctuating but is generally trending upwards, with recent values above 30, suggesting that the asset is not currently oversold. The Bollinger Bands have been widening, indicating increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. The entry price should be $0.611, coinciding with the start of the forecast period and a relatively low point in the recent trend. The stop loss should be set at $0.6, just below the recent support level and the lower Bollinger Band, to limit potential losses. The initial target price should be $0.683, aligning with the forecast high for the week. If the price reaches this target, we can consider moving the stop loss to break even and setting a second target at $0.722, the resistance level. This strategy combines trend analysis, RSI signals, and Bollinger Band dynamics to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Sui shows a clear upward trend with consistent price increases. The RSI consistently moves above 40, indicating bullish momentum, and the forecast predicts further price appreciation. We will implement a combined strategy leveraging RSI and Bollinger Bands. Initially, we will wait for the price to approach the lower Bollinger Band, which indicates a potential oversold condition. When the price reaches $2.41, we will enter a long position. To manage risk, we will set a stop loss at $2.35, just below the lower Bollinger Band. Our primary target price will be $3.53, aligning with the forecast for July 17, 2025. To further enhance returns, we will use a trailing stop-loss strategy. Once the price reaches $3.27, we will adjust the stop-loss to $3.16. If the price continues to rise and reaches $3.43, we will adjust the stop-loss to $3.34. This approach allows us to secure profits while still participating in potential further gains. Finally, if the price reaches $3.53, we will take profits and exit the position. This combined strategy balances risk and reward, capitalizing on the upward trend while protecting against potential downturns. Based on the historical data and forecast, Chainlink exhibits an upward trend. The price has been fluctuating between a support level of $13.4 and a resistance level of $15.5. The RSI indicator has generally been above 50, indicating bullish momentum, although it has recently approached overbought territory. The Bollinger Bands show that the price has been trending near the upper band, suggesting continued upward movement. I recommend a long position strategy with an entry price of $14.1, a stop-loss price of $13.4, and a target price of $15.6. This strategy combines the upward trend, RSI signals, and Bollinger Bands analysis to maximize potential returns. To refine the strategy, we can incorporate RSI and Bollinger Bands signals. If the RSI falls below 30, indicating an oversold condition, we can enter a long position at $13.4 with a stop loss at $12.8 and a target price of $14.5. Conversely, if the price touches the lower Bollinger Band, we can also enter a long position at the lower band price with a stop-loss slightly below the band and a target price near the upper band. Combining these signals with the overall upward trend, the most efficient portfolio would be to enter a long position at $14.1, set a stop-loss at $13.4, and target a price of $15.6, capitalizing on the predicted upward movement while mitigating risk. Based on the historical data and forecast, Optimism demonstrates a fluctuating trend with a recent upward momentum. The RSI consistently stays above 40, indicating a neutral to slightly bullish sentiment. The Bollinger Bands show that the price has been oscillating within a range, but recently trending towards the upper band. Considering these factors, I recommend a strategy focused on capitalizing on short-term upward movements while mitigating risk. My proposed strategy involves a tiered approach. Firstly, initiate a long position at $0.574, coinciding with the first day of the forecast period. Place a stop-loss order at $0.533, aligning with the established support level to limit potential losses. Set an initial target price at $0.606, based on the first forecast price. If the price reaches this target, consider moving the stop-loss to the entry price of $0.574 to secure profits and protect against a potential reversal. Subsequently, if the price continues to rise, adjust the target price to $0.665, representing the final forecast price. This strategy combines technical indicators and forecast data to maximize potential returns while incorporating risk management measures. Based on the historical data and forecast, Pepe shows a slight upward trend with fluctuating volatility. The RSI consistently stays above the oversold level of 20, indicating a lack of strong selling pressure. However, it frequently approaches the overbought level of 80, suggesting potential for short-term corrections. The Bollinger Bands show that the price has been oscillating within the bands, with the bottom band nearing the support price of $0.0000116. Considering these factors, I recommend a strategy that combines RSI and Bollinger Band signals. The entry price will be $0.0000106 when the RSI falls below 40 and the price touches the bottom of the Bollinger Bands. The stop-loss price will be set at $0.0000116, just above the support level, to limit potential losses. The target price will be $0.0000125, aligning with the upper Bollinger Band and a reasonable profit target based on recent price movements. To maximize efficiency, I propose a portfolio that prioritizes the combined RSI and Bollinger Band strategy. This strategy capitalizes on short-term price fluctuations within the established range. Given the forecast data, the price is expected to continue its upward trend, and the RSI is predicted to stay within a moderate range. Therefore, the strategy should be executed with a moderate position size, approximately 5% of the total portfolio, to manage risk effectively. The combined strategy offers a balance between capitalizing on potential gains and mitigating losses by incorporating both technical indicators and support/resistance levels. This approach is expected to yield consistent, albeit moderate, returns while maintaining a controlled risk profile. Based on the historical data and forecast, Starknet shows a clear upward trend. The price has been fluctuating within a defined range between a support of $0.111 and a resistance of $0.152. The RSI indicates that the asset is currently not oversold, hovering around 62.8, suggesting a potential for further upside. The Bollinger Bands are widening, indicating increasing volatility and a potential breakout. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.119, anticipating a continued upward trajectory based on the forecast data. A stop-loss will be placed at $0.111 to limit potential losses if the price reverses. The initial target price will be $0.138, aligning with the forecast for July 17, 2025. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll consider an additional entry point. Conversely, if the price touches the lower Bollinger Band, it could also signal a buying opportunity. If the price breaks above the upper Bollinger Band, it suggests a strong bullish momentum, and we will adjust the target price to $0.152, the resistance level. However, the primary strategy remains a long position initiated at $0.119, with a stop loss at $0.111 and an initial target of $0.138. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, SUI shows a clear upward trend with consistent price increases. The RSI consistently moves above 40, indicating bullish momentum, and the forecast predicts further price appreciation. We will implement a combined strategy leveraging RSI and Bollinger Bands. Initially, we will wait for the price to approach the lower Bollinger Band, which indicates a potential oversold condition. When the price reaches $2.41, we will enter a long position. To manage risk, we will set a stop loss at $2.35, just below the lower Bollinger Band. Our primary target price will be $3.53, aligning with the forecast for July 17, 2025. To further enhance returns, we will use a trailing stop-loss strategy. Once the price reaches $3.27, we will adjust the stop-loss to $3.16. If the price continues to rise and reaches $3.43, we will adjust the stop-loss to $3.34. This approach allows us to secure profits while still participating in potential further gains. Finally, if the price reaches $3.53, we will take profits and exit the position. This combined strategy balances risk and reward, capitalizing on the upward trend while protecting against potential downturns. Based on the historical data and forecast, Bonk exhibits an upward trend with increasing volatility. The RSI consistently moved above 50, indicating bullish momentum. The forecast prices suggest a continuation of this upward trend, with values consistently above the recent closing prices. We will implement a combined strategy leveraging RSI and Bollinger Bands for optimal returns. The RSI is currently around 71.1, nearing overbought territory, suggesting a potential pullback is possible. However, the upward trend and forecast support a bullish stance. Our strategy involves a long position with an entry price of $0.0000210. Given the recent high RSI, we'll set a tight stop loss at $0.0000205 to manage risk. The target price will be $0.0000240, aligning with the upper Bollinger Band and the forecast price. If the price breaks below the support level of $0.0000212, we will immediately exit the position to limit losses. This strategy combines trend confirmation with volatility-based targets to maximize potential returns while minimizing risk. Based on the historical data and forecast, ZKSYNC shows a slight upward trend. The RSI consistently fluctuates around the 40 to 60 range, indicating neither strong overbought nor oversold conditions. However, the recent RSI values have been trending upwards, suggesting increasing bullish momentum. The Bollinger Bands have been narrowing recently, which could indicate a potential breakout. Given the support price of $0.0518 and the resistance price of $0.0632, the price is likely to move within this range. Considering the forecast prices, which are consistently above the recent closing prices, I recommend a long position. My strategy is to enter a long position at $0.0492. The stop loss should be placed slightly below the recent low, at $0.046, to limit potential losses. The initial target price is set at $0.0578, aligning with the forecast price for July 17, 2025. If the price reaches $0.0578, consider moving the stop loss to break even to protect profits and potentially extend the target price towards the resistance level of $0.0632. This strategy combines the upward trend, bullish RSI momentum, and positive forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SUI shows a generally upward trend, though with significant volatility. The price recently bounced from the support level of $0.293, and the forecast suggests continued upward movement, reaching $0.313 by July 17, 2025. The RSI is fluctuating around the 50 to 60 range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a short-term pullback. Therefore, I recommend a long position with an entry price of $0.284. Place a stop-loss order at $0.27 to limit potential losses if the price reverses. To maximize potential gains, set a target price of $0.306, aligning with the forecast high for July 13, 2025. This strategy combines the upward trend, support level bounce, and forecast price movement. The RSI readings suggest caution, and the Bollinger Bands indicate a potential short-term correction, justifying the stop-loss level. This portfolio is the most efficient because it leverages both historical data and future forecasts, incorporating technical indicators like RSI and Bollinger Bands for a balanced approach to risk and reward. The potential return is significant, given the forecast, while the stop-loss minimizes downside risk. Based on the historical data and forecast, Conflux shows a generally upward trend. The recent RSI values have been fluctuating, but the last value of 69.3 indicates an overbought condition. The Bollinger Bands also suggest a potential pullback as the price has touched the upper band. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands. I suggest entering a short position at $0.0915 when the RSI is above 80. The stop-loss should be placed slightly above the upper Bollinger Band at $0.093, and the target price should be set near the middle of the Bollinger Band at $0.082. This strategy aims to capitalize on a potential price correction after an overbought condition. To refine the portfolio, I will add a long position when the RSI falls below 20. Based on the forecast data, the price is expected to continue rising, so I suggest entering a long position at $0.08 when the RSI is below 20. The stop-loss should be placed below the lower Bollinger Band at $0.078, and the target price should be set near the support level at $0.0887. This combined strategy balances the risks and rewards, capitalizing on both potential pullbacks and continued upward momentum. The most efficient portfolio will be a combination of short and long positions based on RSI and Bollinger Band signals. Based on the historical data and forecast, Worldcoin shows a potential for upward movement. The RSI consistently fluctuates between 39 and 61, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and a potential breakout. Considering the support price of $1.03 and the resistance price of $1.12, the price is likely to stay within this range. Given the forecast for the next week, with prices ranging from $0.907 to $1.03, I recommend a long position strategy. My recommended strategy is to enter a long position at $0.907. The stop-loss should be set at $0.827, just below the bottom of the Bollinger Bands to protect against unexpected downturns. The initial target price is $0.972, aligning with the upper Bollinger Band and a conservative profit target. If the price breaks through the resistance at $1.12, I suggest raising the target price to $1.03. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Pudgy Penguins demonstrates a clear uptrend. The price has been consistently rising from $0.0108 to $0.0192 over the past 2 weeks, with a forecast predicting further increases to $0.0207. The RSI values have generally been above 50, indicating bullish momentum, and have reached overbought levels, above 70, on several occasions, suggesting potential pullbacks but overall strength. The Bollinger Bands show that the price has been moving towards the upper band, further confirming the upward trend. Given these factors, I recommend a long position strategy focusing on capitalizing on the continued upward momentum. My strategy involves entering a long position at $0.0174 on July 11, 2025, coinciding with the start of the forecast period. The stop loss should be set at $0.0164, just below the recent support level and the lowest price from the past 2 weeks, to limit potential losses. The initial target price is $0.0189, aligning with the forecast price for July 13, 2025, and the upper Bollinger Band. If the price reaches this target, consider taking partial profits and moving the stop loss to break-even, $0.0174. A second, more ambitious target is $0.0207, corresponding to the end of the forecast period. This strategy combines RSI, Bollinger Bands, and trend analysis to maximize potential returns while managing risk effectively.